How much is a gold bullion bar worth in today's market? Gold bullion bars are popular investments and symbols of wealth. However, determining their value depends on several important factors. Get free gold IRA guide and learn about how to secure your retirement with gold investment. Click the link below in the description to get it. 1. Market price of gold. The value of gold bullion bars fluctuates based on the current market price of gold. This price changes with market dynamics like supply and demand, geopolitical issues, and economic indicators. Tracking gold prices on financial platforms helps in assessing value. 2. Purity and weight. Most gold bullion bars have a purity of at least 99.5%. The weight of the bar directly affects its worth. For example, a 1-ounce bar is worth less than a 100-ounce bar of the same purity. The weight and purity are usually stamped on the bar. 3. Mint reputation. Bars from well-known mints, like the Royal Canadian Mint or the US Mint, often sell for a premium due to their quality and authenticity. Lesser-known sources may be valued lower. 4. Market demand. Economic uncertainty or inflation can increase demand for gold, raising the value of bullion bars. 5. Premiums. Retail sellers often add a premium over the spot price of gold, which can vary based on the bar's weight and brand. Calculate the value. To calculate the worth of a gold bullion bar, use this formula. Value is weight, in ounces, times current spot price of gold, per ounce, plus premiums. For instance, if gold is $2,700 per ounce, a 1-ounce bar might be worth around $2,700 plus any additional premiums. In summary, the worth of a gold bullion bar depends on its weight, purity, mint reputation, market demand, and applicable premiums. Understanding these factors helps investors accurately assess their gold holdings. Free Gold IRA Guide. Learn about how to secure your retirement with gold investment. Download your free Gold IRA Guide now. Click the link below in the description to get it. Thanks for watching. Please like, share and subscribe.